The US-China trade war has been a defining feature of global economics in recent years. Donald Trump, known for his aggressive negotiation tactics, imposed hefty tariffs on Chinese goods. His aim? To reduce the trade deficit and protect American jobs. This ignited a tit-for-tat battle, with China responding in kind. Trump's tariffs initially enjoyed support from some quarters. However, as months turned into years, the economic landscape shifted. The trade war's collateral damage became increasingly apparent. Businesses and consumers grappled with uncertainty and rising costs. This trade war, at its core, has been about more than just economics. It has been a clash of ideologies, a struggle for global dominance. The US, long accustomed to its position as the world's economic powerhouse, felt challenged by China's meteoric rise. The tariffs became a weapon, wielded by both sides in this high-stakes game of economic chess. But as the global economy teetered on the brink, the question arose, could anyone truly win this trade war? Despite Trump's initial confidence, the economic realities of the trade war began to bite. The US economy, though robust, showed signs of vulnerability. Recession fears loomed large, fueled by a volatile stock market and slowing global growth. Inflation, a long-dormant beast, reared its head. The tariffs, by increasing the cost of imported goods, contributed to rising prices. This put a strain on American households, particularly those already struggling to make ends meet. Adding to Trump's woes were legal challenges. Several states, arguing that the tariffs were harming their economies, filed lawsuits. These legal battles threatened to further complicate the situation and undermine Trump's authority on trade. Perhaps most importantly, Wall Street, a powerful force in American politics, began to express its unease. Investors, worried about the impact of the trade war on corporate profits and global stability, urged for a resolution. The pressure on Trump to find a way out was mounting. While the US grappled with economic headwinds, China's response was measured and strategic. Xi Jinping's administration, though feeling the pinch, understood that time was on their side. They adopted a patient approach, absorbing the initial shock of the tariffs. China's vast domestic market provided a buffer against the worst effects of the trade war. The government implemented policies to stimulate domestic consumption and reduce reliance on exports. They diversified their trade partnerships, looking beyond the US for new markets. Chinese social media, a barometer of public sentiment, was abuzz with commentary on the trade war. Nationalistic fervor was evident, with many expressing defiance in the face of American pressure. However, there were also concerns about the economic impact and hopes for a swift resolution. China's strategy was clear: weather the storm, project strength, and wait for the US to blink first. This calculated approach, combined with the country's economic resilience, put China in a strong position at the negotiating table. Section 4. The American consumer caught in the crossfire. As the trade war raged on, American consumers found themselves caught in the crossfire. The tariffs, passed down through the supply chain, resulted in higher prices for everyday goods. From electronics to clothing, the cost of living in the United States steadily increased. Businesses, large and small, also felt the squeeze. Manufacturers faced higher input costs due to tariffs on raw materials and components sourced from China. This in turn led to price hikes or in some cases factory closures and job losses. The agricultural sector, a key target of Chinese retaliatory tariffs, was hit particularly hard. Soybean farmers, for instance, saw their exports to China plummet, leading to financial hardship and uncertainty. The trade war exposed the vulnerabilities of globalized supply chains. It highlighted the interconnectedness of the global economy and the ripple effects of protectionist policies. The American consumer, accustomed to a certain standard of living, was forced to confront the consequences of this trade dispute. Section 5. A new trade horizon, India, emerges. As the trade war with China dragged on, the United States began to actively explore alternative trade partnerships. One country that emerged as a potential key player was India. With its large and growing economy, India presented a promising market for American goods and services. The US and India initiated negotiations for a potential trade deal. This deal, if successful, could encompass a wide range of sectors, including agriculture, technology, and energy. It could potentially help the US reduce its reliance on China and diversify its supply chains. However, India, wary of being seen as simply a replacement for China, approached these negotiations cautiously. India has its own strategic interests and is keen to ensure that any trade deal with the US is mutually beneficial. The potential for a US-India trade partnership is significant. It could reshape global trade flows and have far-reaching economic and geopolitical implications. However, it remains to be seen whether this potential can be fully realized. Section 6. A calculated gamble, political ploy, or strategic retreat. Trump's decision to consider tariff reductions on China sent shockwaves through the global economy. Was this a strategic retreat, an acknowledgement that the trade war was not going according to plan? Or was it a calculated gamble, a move designed to secure concessions from China and boost his re-election prospects? The timing of the announcement, coming as it did amid growing economic uncertainty and domestic political pressure, fueled speculation. Some analysts argued that Trump, feeling the heat, was seeking a way to calm the markets and appease voters ahead of the next election. Others, however, maintained that Trump's move was a shrewd negotiating tactic. By offering to reduce tariffs, he was signaling a willingness to compromise while simultaneously putting pressure on China to reciprocate with concessions of their own. The truth, as is often the case, likely lay somewhere in between. Trump, a pragmatist at heart, was undoubtedly influenced by both political and economic considerations. The question remained, would his gamble pay off? Section 7. Global Trade, Navigating the Shifting Sands. The US-China trade war, with its twists and turns, has highlighted the fragility of the global trading system. It has exposed the limitations of protectionist policies and the interconnectedness of the global economy. The world watched with bated breath as the two economic giants locked horns. Trump's decision to consider tariff reductions, while a positive development, does not necessarily signal the end of the trade war. The underlying tensions and disagreements remain. The path forward is uncertain, fraught with challenges and potential pitfalls. The global trading system, already under strain from rising protectionism and geopolitical tensions, must adapt to this new reality. Countries are reassessing their trade relationships, seeking to diversify their markets and reduce their reliance on any single partner. The US-China trade war has been a wake-up call for the world. It has underscored the need for a rules-based trading system that is fair, transparent, and predictable. Whether such a system can be forged in these uncertain times remains to be seen.